What's happening, YouTube family? I am finally back. I know it's been a couple of months, and you guys were probably wondering where the heck is this guy? What is he busy with? What does he have going on? But I'm glad to say I'm here. I'm in good health. My mental space or my mental health is the best it's ever been. I've been on a crazy run, building crazy projects, and I'm here to spill all the sauce, give you guys everything that you need, share value, share insights, and literally pump up this channel to become the biggest South African trading YouTube channel there is. But without you guys, it will not be possible. So please like this video, hit that subscribe, share this with a friend, and help me build this YouTube channel with you. Today I'm going to take you guys through my ultimate checklist that I use to take trades. So let's get straight into it. Follow me over to the charts. What's cooking? It's so nice to be back with you guys, sharing insights, sharing what I love, my charts, literally whatever you guys want, whatever you guys need. There was going to be no gatekeeping. I'm going to share everything with you guys. But tonight, what I want to share and just quickly break down is my complete checklist that I use to take my trades. Why I use this checklist, why I use these confluences, and what these confluences help me achieve within the market, and why they're really so important to follow, and why they're so important to stick by. And I see so many times people chasing strategies and people chasing all different shiny objects within the trading space and the trading industry. And it actually literally just comes down to applying clean, pure discipline on the charts and really just sticking to a nice checklist like this, right? So for instance, checklist number one, momentum and intent. Number two, liquidity grab. Number three, break of structure. Number four, supply or demand slash CP. CP standing for continuation pattern. And then five, most important to me, is probably time and price. Now let's quickly dive straight into it. I'm going to do this as easy and as simple as possible, or as quick and as simple as possible. I'm going to keep these videos raw. Like I said from the get-go, this was my mission. I want to apologize for being quiet. There was a lot happening. We've built some crazy, crazy things, a crazy free community, and I'm going to take you guys through all of that still. But for tonight, let's just go through my checklist. So, first and foremost, momentum and intent. Why is it so important to trade and use momentum and intent, right? A lot of the times I see individuals looking at the chart like this and potentially saying, you know what, price is literally pushing way too high. We have to come down. Or it's time for price to come down. And then they potentially take and put a sell position right there. They have stops above the highs and they're targeting these lows. And then what does price do? Price literally goes and stops them out. And then price continues trading higher. And they'll be like, you know what? We have to come down now. We have to come down. And then what happens? Price stops short, right? And that is why it is so important to understand and go with the saying that you don't want to catch a falling knife, right? But if you turn it around, you don't potentially want to stop price that is really pushing higher. There's no such thing as price is too high or price is moving too high. It has to come down. Like the charts don't have to do anything. They don't have to listen to you. They don't have to respect you. They don't need to do any of that, right? And that's why it's so important that if you see price pushing quite bullish and you see the intent is to the upside, always align your buyers and your position with what you're seeing in the price. That just gives you so much more of an edge in the market, right? That helps you so much with your profitability in the long run, with your risk reward, like literally everything plays off momentum and intent. Like we want to go and be with the big boys in the game, right? If you see price pushing higher and you see price pushing and there's buyers, in control, why would you feel the need to potentially take any sell positions, right? So that is number one, momentum and intent. Number two, liquidity grab. I think the best way for me to explain that and is for you to understand that if you have the wick, you have the candle like this, for instance, first and foremost, you have your wick right at the bottom. Following your wick, you have your body. Now, on the body, we have two components. We have, for instance, the open, the close. On the wick side, let me just get a wick all the way up here. Oh, that's not a wick. That's more wick there. We have the open and the close, vice versa, whichever side it is. If it's bullish, in this case, it is bullish. So this will be your open. This will be your close. And then we have our low and we have our high of this candle, right? So for instance, in this video, you can see that price pushed bearish, 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 bearish candle all the way down here. And then all of a sudden, there was a lot of bullish pressure that came through. Buyers stepped in and price got pushed all the way to the top. Had a small little retracement, but candle closed right there at that space, right? So this shows you one or two things, right? And I always say that the wicks do the damage, the bodies tell us the story, right? So for instance, here you can see this wick just opened up and grabbed a lot of liquidity in this area. So previous lows could have potentially been swept. Whatever the case, you can see that sellers were exhausted and that buyers took over and intent took over and price then pushed bullish. So here's a phrase that I want you guys to remember. And I think this is going to be a defining moment for you in your trading game, right? If we see a wick, right, and we see intent in the opposite direction, price is most likely going to continue in that direction, right? Not every week. It has to be in context, taking out a key low level and intent. But that's the saying. If you see a wick and intent in the opposite direction, price is most likely going to continue in that direction. Now, one of the most overlooked terminologies in trading is break of structure. Guys, and this is something that we cannot run away from. Structure, right? You get higher time frame structure and you get lower time frame structure. We all understand and we all know that price is fractal. What does fractal nature of price mean? It means that within the lower time frames, they create our higher time frames, right? So you will have structure on a lower time frame like this, which will then in essence create our higher time frame. Now, apologies for my drawing skills, but this is not going to be any more difficult than what it needs to be, right? So structure, you have to identify key higher time frame structure, which will be the dots that I'm putting on the screen right now. These could be like 1 hour, 4 hour, daily, weekly. It all depends on what time frame you use to enter. It all depends which time frame you will then use as your higher time frame. But everything in between, which will be these structure levels here, will be lower time frame, 15-minute, 5-minute. Like I said, you have to use them in conjunction with the time frame that you enter. So you cannot enter on a 5-minute, but use a weekly time frame as a higher time frame. You cannot enter on a 1 minute and use a monthly as a higher time frame. Like if you enter 5-minute, 1 minute, your higher time frame should be 15-minute, 30-minute, right? And you should learn how to spot key structural levels, higher time frame, and line that up with your lower time frame entries. Because, for instance, here, you cannot take a sell here knowing that we potentially have a higher low forming. So your risk to reward will be completely out, but there will be no continuation for your cells, right? Unless we break a key structural level, and then we can only look for sell, right? Very important, very key to understand. Now, supply and demand. Probably one of the things that traders confuse or over explain all of the time, right? And I'm going to use the current market condition in South Africa. We all know the fuel prices are crazy, oil prices are crazy, and things are all over the place, right? So, for instance, now we have three tiers, right? Let's just use this, and I'm going to use this analogy for all the picture brains out there. So, if you're a picture brain, please let me know in the comments, right? With that being said, I'm going to stop the video here for a second. Please like this video, subscribe to the channel, share this to a friend, hit the comment section. You guys will just help me push this further and take this channel and knowledge to individuals that really need it, right? So here we have, let's just put 20 Rand a liter for fuel, right? I don't know what I just pushed, but just forgive me. Here we have, let's keep it round, 30 Rand for fuel. And here we have 40 Rand for fuel. So what does supply and demand mean, right? Supply and demand means that people, the first Wednesday of every month, you see people rushing to the garage, trying to fill up their cars, right? That is where people accept the price and the demand at which we are now trading, which will be 20 Rand a liter, right? The next first Wednesday of the next month, we see people, you know, pushing and going back to the garage to fill up their cars because knowingly that price is going to increase, right? At a supply of, let's for instance say 30. So let me just draw this down. Price was coming up. There was an increase. Price pushed low. And then people come and they fill up their cars again. Next month, when price pushes past this level, people do what? They go and accept the 30 Rand. So the price that people were afraid at buying at now becomes the new norm for people to buy at. And that's the price where people then just purchase and they buy it from. Before price pushes higher again, comes all the way here, and then that becomes the new norm for price to continue high. So you can see that the supply and people selling off, and this comes into logic with buy low, sell high, right? They're just based on supply and demand. If there's enough supply in this area, price will get pushed lower into this area where demand is created, knowing that price is going to push higher into supply again, and people accept and absorb this price as if it was a norm. And then price gets pushed higher, and the area where price was sold off from previously because of fear, whatever, sellers stepping in, becomes the future norm. And you can look at this as areas of support, resistance, whatever terminology you want to use to make this easy for you to understand or for you to take your trading to the next level. You just need to be able to see that in an area of price, a range, right, that we have. We always use the following levels as ranges, right? And I want to just change these colors while I'm at it. But these following ranges that we use, you get the 50%. Now the 50% is always our equilibrium. So what does that mean? That means that anything above 50% is premium. So this area is a no buying zone, but this is where you want to be selling price. And then anything below that is a discount. This is a buyer's, and this is where you want to be buying to push price higher. So you can see how the low price was the discount, but in the future, with price pushing higher to 40, 30 becomes the new discount now, right? Because people are now accepting the higher prices as a lower price to buy and average your way into the market. Okay, so I hope that makes sense. And then the most important thing, time and price. Now, this is all based on what pairs you trade, what currencies you trade. If you're an indice trader, the Asian sessions trading AU, yen, whatever the case, or if you're trading dollar pairs, you need to make sure that you trade in the right time frame, where the market is volatile, where your pair moves. You cannot be trading Asian pairs in New York, right? It doesn't really trend that way. You want to trade pairs that trend in your market conditions. Like, for instance, myself, I'm a DAX trader. I trade German 40. I trade no earlier than 8 o'clock in the morning. So I'll start trading from 8, and I don't trade any later than 8 p.m. at night. Like, my trading window is from London open to close to New York close. That is when I trade. If there's no trades within my window and within my time frame, I move on to the next trade. So guys, there you have it, my ultimate checklist. And I want to thank you guys for joining on this journey with me. Thank you for watching. Thank you for being patient with me. But I'm back. I'm here to stay and here to add a lot of value for you guys. So be blessed.